Alrighty folks, very important video tonight. Man, I gotta say, in the past few days, I've heard a lot of folks saying, don't buy the dip, stop buying the dip. And they're kind of preaching that out there recently. And so I thought, okay, let's do an in-depth video here on, I want to show you guys a lot of stuff. So if you're thinking about stopping buying the dip, I want to show you a lot of information so you can at least make an informed decision. If it's a decision you basically want to go on a buyer strike, let's say for the next 6 months, 12 months, 2 years, whatever, right? At least you can make an informed decision, because I want to show you some extremely important things here, looking back in the past and kind of how these crashes, bear markets usually go, so you can at least understand if you're going to make a decision like that and to go on a buyer strike, you're at least informed on kind of the decision you're making essentially at the end of the day. And I want to give my perspective on this as well. But yeah, it's been something that's just, I feel like literally in the past few days, like I've been seeing so much of it, like stop buying the dip, stop buying the dip. And it's crazy how fast the market can change. I did a video a year ago about, kind of the euphoria that was in the market and just all the stuff that was going on, right? And at that time, man, it was such a buy the every dip in sight market, right? And diamond hands and those sorts of things. And that was the market we were in last year. And now we're in a moment where at that moment stocks were at all-time highs, 52-week highs, multi-year highs, all-time highs, right? And now we're in a market where countless stocks have been absolutely decimated, and now folks are saying stop buying the dip. And so it's interesting how fast things can change in the market. And you got to think for a moment. You got to ask yourself, why and how did we go from a year ago, buy the dip, buy the dip, buy the dip, buy the dip, buy every dip in sight, it goes down 3%, buy the dip, 2%, buy the dip, oh my gosh, it's down 5% from all-time highs, buy the dip. How did we go from that market to this market now all of a sudden where people are saying don't buy the dip, stop buying the dip, right? Well, there's two reasons. These are the two overwhelming reasons, in my opinion, on how we went from that market to this market now, and from buy the dip to all of a sudden it's like, no, don't buy the dip now, right? Two things. The first one is recession fears. Obviously the majority of folks, I would say, feel like we're probably going to have a recession. Either we're in it right now or it's going to happen very, very shortly here, essentially, okay? So recession fears leads folks to think that since there's a recession, we're very close to a recession. That means, don't buy stocks, essentially, right? Now, number two reason that people think that, right? And we'll see if that's really true. The number two reason is buying the dip. Folks have been buying the dip for a while, and it just keeps dipping and dipping and dipping. Think about this for a moment, right? The SPAC stocks, the super high growth stocks, the small cap stocks, those babies have been falling for like 16 to 17 months now. 16 to 17 months straight, all right? And so if you've been buying those stocks for the last 16, 17 months, every single time it just goes lower and lower and lower, right? The rest of the market, for the most part, outside of maybe oil and gas stocks, have been falling for the last 8 months, okay? And I'm talking about like big tech and those sorts of stocks. Those started to falter really around November. And now here we are, I'm recording this in the middle of June of 2022, right? And November of 2021 is when, most of the other market peaked out. So in those stocks, basically, it's just been going lower and lower and lower for like 8 months now. And people are like, okay, so between 8 and 16 months now, people have been buying stocks, and every single time it goes lower. And so between recession fears and the fact that everybody that has been actually buying the dip out there is just gotten obliterated on every share they've essentially bought, it's led folks to say, don't buy the dip now. And so I understand it coming from that context, okay? Now, that doesn't mean it's the right decision, or even remotely. It could actually mean it's a very, very poor decision, okay? First thing I want to bring up here is this shows you where we are at as of today. This also shows you where our max drawdown was, which max drawdown, by the way, was actually yesterday, the trading day yesterday, essentially, okay? So we are down as of right now, almost 31% from all-time highs on the NASDAQ. We're down about 30% on the Russell from all-time highs. As of yesterday, we were down 33% on NASDAQ, down 31% on the Russell, right? Now, basically the S&P 500 is down 21% as of right now. It was down almost 23% as of yesterday. That's a bear market, right? When you're down over 20% of the S&P 500, you're in a bear market. Now, what's going on in essentially the NASDAQ and Russell, we call that a crash. When you start talking about you've gone down 30% plus from where your highs were, you're in a crash now, right? Once you go over 30%, that's where, for me, that's the number I draw my line in the sand, and I say we're now in a crash for this. 10% correction, 20% bear market, 30% plus, we're in a crash, okay? And so we've crashed essentially now in the NASDAQ and the IWM, and the S&P 500, we're just in a bear market as of right now, okay? Now, this is very, very important for everybody watching this to understand this, okay? In the past 25 years, the times that the NASDAQ went down 30% plus, it's only been a few of them. The tech bubble, we went down over 30%. The great financial crisis, right? We went down over 30%. The 2020 crash, we went down for over 30%. And that was for like a snap of fingers. And right now, that's in the past 25 years. So what you got to understand is what we're going through right now is a very freak situation. It very rarely happens. It very, very rarely happens that you ever see the NASDAQ go down over 30%. It is not a normal thing at all. It's a freakish thing. It does happen. It happens very few and far between. And that is something you got to understand. This isn't something that just happens all the time. And so what do we know? What do we know about these sorts of situations, right? The tech bubble, obviously there was a time period when, before tech really was in a position to change the world, a lot of people got very excited about tech in the late 90s, right? Before it got to that place. Kind of reminds me a lot of crypto in the past few years, where crypto, can definitely change the world in many ways over the next decade or two, but people have gotten very, very excited about crypto and invested very heavily into it, when in reality, it hasn't become a big part of the actual economic landscape yet, right? It may over the next 5, 10, 15 years, but it hasn't done that yet. And so the tech stocks went through that stage in the late 90s before it was really their time to shine. And really the past 10 to 15 years has been tech's time to shine. And it continues to be tech's time to shine, right? And so at the end of the day, during that crash, you should have honestly, NASDAQ down 30%, 40%, 50%. There was a lot of stocks, Amazon at one point was down 90%. 90%. You should have been buying that baby, right? All the stocks that had great profile engines, had margins that were just expected to get better over the coming years and get their profitability in a better place. That was obviously a huge buying opportunity. Apple, Microsoft, a lot of those stocks had crashed in that tech bubble essentially. You got some extraordinary opportunities. Before the tech bubble crashed, the valuations were sky high. It wasn't the time to buy, but when things had already crashed, it was the time to buy, right? 2008, obviously that was a great time to be a buyer of stocks. It was the end. It was, they said that this was it. The whole financial system was going to collapse, right? And ultimately that was the time to buy. 2020, oh my gosh, we're going to close the economy for 3 years. All these companies are going to go bankrupt, man. All the hotels are going to go to zero, this and that. That was the thing that was talked about, right? Ultimately, it was the time to buy. And, in most of these situations when you get a crash, it's the end of the world. This is it. It's never going to come back. It's never going to be the same again. And you kind of hear that time and time again in every single one of these. They're very, very serious situations. When you're in that moment, it's very serious. It's very dire. People say it's the end. People are freaking out, panicking, capitulating, saying, don't buy. What are you doing? I, as somebody that got into the market at the end of 08 and into 09, I was told that thing. Whenever I did mention that I was starting to get in the stock market and investing in stocks, everybody told me, what are you doing, man? Just save your money. Don't put it into stocks, right? Because when everybody goes through that pain, everybody gets very, very fearful, right? And it's natural, right? And so that's something very important to understand. And obviously, we're going through one of those situations right now. Every single one of these is different. Right now, it's inflation and, that whole situation, right? And obviously, recession fears. But recession fears usually basically happen after every single crash, usually, okay? Now, look at this here, okay? What I'm showing you here, and this is very, very important for everybody watching this, what I'm showing you here.
Say thank you to Public
Public.com for sponsoring today's video. Public is an amazing investing platform that allows people to be better investors. Public members can build a portfolio with any stocks, ETFs, crypto, soon NFTs, and collectibles. Public makes investing very accessible for any investor. Let me show you. They offer thousands of stocks and ETFs in the platform. They also have over 30 cryptos, including the most popular ones like Bitcoin, Ethereum, Cardano, and others. One of my favorite things about Public is the amount of educational content they have on the platform. For instance, they provide custom content tailored to your portfolio. They also have town halls where community members can ask business leaders questions, such as they had one recently with Kathy Wood, which is pretty dang cool given the current market conditions. I also like that Public has an interactive social community that it can share ideas and chat with millions of investors, creators, analysts on Public. They also have great customer support. If you have any questions, comments, or need assistance, you are able to connect quickly and easily with real people directly in the app. They have a simple to use interface. If you want to level up investing and build a diverse portfolio of stocks, ETFs, and cryptos, use my link that is pinned comment, public.com/financial education to receive up to $1,000 to invest when you sign up and make a deposit. You can find it below as a pinned comment as well as the full disclosure in the description. Thank you so much, and let's get back to the video. Is the NASDAQ 100 in the last not really the last crash, because the last crash was technically the 2020 crash, right? But the previous big crash was the great financial crisis, when we almost lost the entire banking system. Unemployment climbed to like 10% plus. The amount of folks on food stamps went through the roof, and it was a very ugly situation, obviously. And a lot of folks lost homes, foreclosure, short sales, the entire real estate market got devastated like we'd never seen the real estate market get devastated. That wasn't even thought to be a possibility before the financial crisis happened, essentially, right? Now, during that crash, right, here's a problem. If you say don't buy stocks, basically what you're saying is one of two things. One thing is the stock market will never come back, okay? The second thing you could be saying by telling people don't buy stocks when you're in a crash is don't buy them because you'll be able to time out and buy at the bottom or something like that, right? Which is obviously not a very realistic situation. For instance, right, in this crash, like, when should you have bought? We showed, support for several months right there, right? And then the market started to go up. Maybe you thought, okay, the crash is over. Now's my time to buy. All to go boom, 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 right? Then all of a sudden we went down and then we started going up. You could have been like, oh, time to buy. We're getting confirmation. The market's hitting certain trends. Technicals are being hit. We're looking good. Oh, and then all of a sudden you reach lows. You're like, okay, that's probably the lowest. Now we need to buy in. And then you go lower. And then it's like, okay, maybe now's the time to buy in. Now we buy in. And then you go lower, right? And then you go up and then you go lower and then you go lower, right? And so at the end of the day, you can't really even worry about all this drama of trying to time it out perfectly and, we're at the bottom now. You just have to be buying the whole time. And during this crash, you could have bought here, 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 bought here, bought here, bought here. It didn't matter. You just need to be a buyer out there in the market during these crashes. That's something we know, like, historically, this is like proven out time and time again. You don't worry about like perfectly trying to time it or whatever. You're getting stocks at such insane discounts anyways, and you're never going to time it right at the bottom anyways. That's not the way this works. We have no clue if the 33% drawdown in the NASDAQ was the bottom. Maybe it's 40%, maybe it's 50%, maybe it was 33%. That was the lowest, and we're up from here. No one has any clue. No one. No fundamental person has any clue. No technical person has any clue. Doesn't matter your net worth. Doesn't matter how long you've been in the market. No one has any clue if we've already reached the bottom on the NASDAQ, or the bottom's going to be next month or 3 months or 6 months or 12 months. No one has any clue. So at the end of the day, if you're seeing assets for very good prices, you need to be picking up those assets along the way and not worrying about trying to perfectly time it, right? Same exact thing happened in the tech bubble as that thing just fell apart, right? I mean, you could have bought several times and thought, I'm getting confirmation, we're going back up again, right? And I'm buying, and all to go lower and lower and lower as that situation happened. At the end of the day, let's say you were buying Amazon, you should have just kept buying Amazon, increasing your ownership. And as you came out of that crash, you should have stayed with your foot on the pedal and kept acquiring shares. And you see Apple, and they're building all these Apple retail stores. You're like, wow, this is cool. Oh man, this iPod thing is really taking off. Seems like Apple's got their mojo back. Wow, Steve Jobs is really leading this company well. Wow, they got the iTunes store now. Wow, this is really cool. Oh, there's starting to be some rumors about this iPhone coming. Let me start to research this. Oh, it seems like the smartphone idea seems to be kind of revolutionary. This could be the next big thing out there, right? And you could have been doing all this research and increasing your ownership and increasing your ownership. Meanwhile, other folks might have told you, no, wait for the bottom. We haven't even reached the bottom yet. It's just, you don't play that game, man. You don't play that game. It's a losing game, right? Now, you have the other folks that say, well, this time is different. We're never going to recover. NASDAQ's never coming back to where it used to be. The Russell's never coming back to where it used to be, blah, 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 right? Man, that's it's just like a common theory. Every single time you're in a crash, you're going to hear folks, and a lot of times it's the doomsday folks going into it, and people believe it. When you're in that, people actually believe it because it's what they're seeing in front of their eyes right there. It just keeps getting worse and worse and worse, and so if something keeps getting worse and worse and worse, you start to believe it, right? Like it's just going to keep getting worse. No different than if we went back. Let's go back in time to January 2021. When all those insane stocks were going insane, right? That had no reason to be trading at the valuations they were trading at. You couldn't tell people differently at that particular time. A lot of people, you couldn't tell them differently that, this is not lasting. These valuations can't stand up and those sorts of things. And, unfortunately, it all came crumbling down. And when things come crumbling down, they bring down a lot of stocks that don't deserve to have come down to certain valuations, right? This is the thing you got to understand about these. When you go through a crash, everything comes down. It's not just the winners and the losers. It's everything. So there are certain companies that have been brought down 60, 70, 80% that do not deserve to be down 60, 70, 80%. But they've been brought down because everything kind of gets grouped together. When the tech bubble blew up, they brought down every single stock. It didn't matter what stock it was. It destroyed them all. When the great financial crisis happened, it didn't matter if you had a great company or a bad company or a good company. Everything crashed by the end of that thing. It didn't matter what business it was. It didn't matter if it was tech. It didn't matter if it was large cap, mid cap, small cap, oil. By the end of that thing, everything had been hit. And it doesn't mean it's right. It's just the way it plays out, okay? And so at the end of the day, you got to understand that it's very, very important. And, to bet against the markets is betting, on the long term, it's just, it's a very silly thing because at the end of the day, the whole system is rigged in your favor, essentially, okay, as a long-term shareholder. You're looking at many of these stocks right now, and I just want to pull you guys up charts of a few of the big companies in the world, all right? And what you're seeing is it's not just that, because a lot of people see that these stocks are down massively on a one-year basis or on a year-to-date basis. But some folks say things like, well, you shouldn't look at it from that perspective. You can look at these stocks even on a multi-year basis and find many of these companies, the biggest of the bigs now at this point in time, it's not just smalls and mids. Many of the biggest of the big companies in the world are trading at multi-year lows. Like you have to go back to 2020, 2019, 2018, some of these stocks 2017 to find them trading at ranges where they're trading at now. For instance, Amazon was trading near close to where it's trading at today. Amazon was trading close to that in like 2018, 2019. The Rona peak was higher than Amazon's been trading recently. This is the prior to Rona peak, right? So think about that for a moment, right? There Amazon is trading around the same or even lower than it was years ago, right? Years ago. You look at a stock like PayPal. This stock is massively lower than it was prior to Rona. It's massively lower than it was in 2019, 2018. I mean, this stock's been trading recently around values it was back in 2017. Think about all the growth the company has had over the past 5 years. From the top line, the bottom line, how much more well-established the business model is. Everything across the board, the financial statements. Think about all that. And yet this stock is trading at a lower stock price than it was back then, right? Never mind if they did share buybacks and bought some shares back, things like that, right? Look at Meta, FB, right? They own obviously Meta, Facebook, they own Instagram, they own WhatsApp, they own Oculus, right? And look at the stock. The stock today is trading lower than it was prior to Rona. It's trading lower than it was in 2019. It's trading lower than it was in 2018. It's basically trading at similar prices that it was trading at in like 2018. Years ago. Think about where that company's revenues have gone, where its margins have gone, where its EPS has gone, where its net income has gone, where its employee force has gone over those years, right? And meanwhile, the stock price is trading lower today than it was back then. Look at a stock like Shopify. This stock is as of today, is lower. This is crazy. The stock price is lower today than it was prior to Rona. Think about this business model was changed positively forever for the better because of Rona. And the fact that that stock price is trading lower than it was prior to Rona is downright silly. Just downright silly. But that's the market we're in right now. It's very focused on the short term. It's very focused on year-over-year comps and these sorts of things. It's disregarding the long term right now, right? I mean, you can get the stock back at levels it was basically in 2019. 2019, come on, man. You got to be flipping my flapjacks. Like how much in a better place this business model is today than it was in 2019. Come on, you got to be flipping my flapjacks, man. Look at a company like a JP Morgan. It's not just tech companies, right? This is obviously the biggest, most well-run bank in the world. And the stock price today is actually significantly below where it was prior to Rona. It's below where it was in 2019, below where it was in 2018. You know, you have to go back to 2017 to find it, considerably trading beneath where it's trading at right now. And so if you're looking at countless of these stocks, Netflix, for instance, look at Netflix. I mean, this stock is down here. It's massively under where it was trading prior to Rona, massively under where it was trading at 2019, 2018. Think about how many customers Netflix has gathered over the last 4 or 5 years, right? Think about where their revenue is today versus where it was 5 years ago. Everything, their brand, everything like that, right? And yet this stock price is trading lower today than it was 4 or 5 years ago. It's insane to think about, right? But that's the market we're in right now, and to be honest, it doesn't quite make sense. But you're in a crash, and when you're in a crash, things don't make sense. Everybody's just very caught up into the short-term numbers, the fear, and so you see a lot of these stocks trading at prices they were trading at years and years ago. And the only time you usually see this on a massive scale like this, usually the only time you ever see this is actually in a crash. This isn't something that just happens all the time. You see this only when you're going through a crash where stocks go to multi-year lows, and it's like, holy smokes, how's this stock trading at where it used to trade at 4 or 5 years ago? And yet their business is in 10 times of a better place than where it used to be at that particular time, okay? And so at the end of the day, when you're in a crash and folks say stop buying stocks, it's one of the silliest things ever, in my opinion, as a long-term investor. If you're trying to trade in and out of stocks or something like that, different thing. But for a long-term investor to not be buying during a crash, during a bear market, is a massive, colossal mistake. The game plan is this, okay? 2 things. Max out your income for the next 6 to 18 months. I spoke about this in a video recently. If you got to get 2 jobs, 3 jobs, whatever, max out your income, put in those grind time, max out your income right now, and max buy everything you can for the next 6 to 18 months. You don't get these windows for very long. If folks are hoping stocks keep going down for the next 3 years, good luck. If folks think stocks keep going down for the next 5 years, good luck. You usually get kind of a 6 to 18 month window where you can add these assets at incredible discounts and just buy. And then when the market starts to recover, you don't let your foot off the gas and you keep buying and increase your ownership in companies you love. Own the world, and during a time period like this, chase your next zero. So whether that's going from a $5,000 net worth to a $10,000 net worth and getting that next zero to your comma, right? Or getting, you're at $50,000 and you're trying to get to $100,000, or, you're at $500,000 and you're trying to get to $1 million, or you're at $5 million, you're trying to get to $10 mil. Chase your next zero in this sort of market. And don't stop. Max your income, max your buys. Keep it simple. There's going to be a lot more fear. It's going to be a lot more fear for the next several months. I promise you that. People are still going to continue to freak out. When the market starts to recover, people are going to tell you it's not real. This plays out the same every single time, man. It plays out the same every single time. That's what I'm focused on, and buying everything I can right now, and I'll continue to for the next number of months until my ownership of companies is as large as it can possibly be. And that's the game plan. Hope you guys enjoyed this as always. Much love, and have a great day. Don't forget to check out Public. That will be pinned comment down there.